what is hysterical is that, think of LASIK examination, LASIK treatment for your eyes. That's going down in value, where all other medical things are going up. Cosmetic surgery, costs are going down. There's competition. People know what it costs because the insurance companies aren't covering it. These health savings accounts would actually be a real saver for the country. So this is really, those are the things that this deficit reduction, the things that are out there that are very likely going to happen in some form or another. If we're smart, and if we're lucky, if we are very supportive of the people that are out there trying to push for these things without the tax increases, I think the country can start moving in a much better direction than it is. But taxes are going to have to go up. One of the things that's in all the Deficit Commission reports is tax reform. And you've probably heard, it's really been, a lot of people have been really excited about the fact that they're saying they're going to actually reduce the tax rates in this tax reform. The highest rate is now 35%. It was going to go back to almost 40% at the maximum rate. But now they're saying they can actually reduce it. But the trick is the taxes are going to go up, because they're going to start taking away deductions. They're going to be taking away deductions for your state and city income taxes. They're going to be taking away deductions for your real estate taxes. They're going to be taking away deductions for your mortgage interest. They'll be taking away a lot of your deductions. Now, they'll give you lower rates, but they'll take away your deductions. From a pure economic point of view, that will be very stimulative for the economy and very helpful for jobs. But it's going to be more costly. At the end of the day, we're going to have less money to spend than we had before. Because don't be fooled by the lower rates. If it's part of this deficit reduction commission action, it's only there because taxes are going up. They need to do tax reform. So they're trying to do two things at the same time. A little bit of trickery going on there. They're saying we're reducing your maximum rate, but at the end of the day, they're telling you this tax reform is intended to raise more money. Now, they may say on average it's only going to raise a little bit more money because we'll raise more of the money by cutting spending or whatever. So this tax reform is only going to raise a little of the money. But you got to be careful, because on average it'll raise a little bit of money. I mean, you can die in a lake that has an average of only 6 inches of water, but you could die in a place where it's 20 feet deep. The question is, who is going to be paying and who is going to be benefiting? People who have no deductions anyway are just going to benefit from the lower rates. They're going to pay less taxes. People who have mortgages maxed to the hilt with big real estate taxes, they're going to be clobbered. Their taxes are going to go way up. What will be true for them is, as they make more money into the future, they'll get to keep more of it. So they might have a little bit more incentive to work harder, which will be good for the economy. But at the beginning, there's going to be a hit. You're going to be hurt. And who does that hurt most? It hurts New Yorkers, which puts us in actually a bit of a quandary. And that is, as true small government libertarian people, it's what we want. But in fact, we have to realize that we're benefiting more than most people from that. We live in a state that is spending out of control, but the federal government is actually giving us a little bit of a tax benefit when we pay for all these taxes for this out of control spending. So what does that do? It means we now have to turn, after we finish turning from the federal, we have to turn to the state. And we've got to beat up on the state to reduce our taxes, because to make matters worse, not only are these increased state taxes killing us, but we're going to be getting less and less benefit from the federal tax for spending this money. So the other thing, as I mentioned at the beginning of my talk, we've got to deal with what's going on in Albany. We've got to keep taxes down. We've got to cut spending. If you think quangos are a problem in the federal government, it's even worse in the state government. They got agencies all over the place. there's a name, I don't know if people remember the name Bill Ronan. He was old Nelson Rockefeller's financial guy. He's now 95 years old, living in Florida, as sharp as he ever was. He's kind of my idol, but he's come to a realization that he's a very sad guy, because he was the guy who invented the concept of off-budget financing with these state agencies. And he realizes now that when he started it, he never thought it was going to grow into the monster that it is today. But where is he? He's moved down to Florida. You know? So anyway, we need to be on top of Albany. We need to cut their spending. We need to hold Governor Cuomo's feet to the fire, and make sure that he does do what he says he is going to do. That's pretty much covers what I wanted to say in terms of the future. So if anybody has any questions, I'll be glad to take them. And by the way, with respect to let me just take 1 minute before I finish to talk about some specific tax saving ideas. You should have in front of you what I handed out in terms of deductions not to be overlooked. There's just a couple of principles I want to point out, and as I said, if anybody has any specific questions, I'm happy to talk about them later. Yes.
I'll give it to her.
They're in the back. We have extra, so you can be sure to get it. It's actually a small print. It's I got the bigger print version because I have it, but I didn't want to have too much pages to hand out. The things to look at in particular. If you have medical expenses to deduct, sometimes people have some big medical bills, and so they say, "Oh, I'm going to take a deduction for my medical bills." They don't realize that once you're over the hurdle for medical, you got to start looking at those things that people don't think about so much. Everything from hearing aids to the extra cost of special food, medical insurance. All of that gets into the pot, so don't overlook a lot of medical things. Also, be careful of a lot of, if you have business expenses, if you have businesses, you need to make sure, if you have businesses either as a sole proprietor, you're doing consulting, or you have, you're involved in partnerships or subchapter S corporations, if you have expenses, don't deduct your expenses, as most people do, as miscellaneous itemized deductions, because that deduction doesn't give you that much in the way of tax saving. You can associate those expenses with your businesses, your S-corps, your sole proprietorships, and deduct it there. Your rental properties, deduct it there. It's what's called above the line. It will give you a much greater tax saving than just taking it as a miscellaneous itemized deduction. Be aware that there's a couple of very special things here. I'm dealing with a number of people. Unfortunately, a lot of people are divorced, and they say, "Gee, I want to put together a retirement fund, but I'm not working." Well, any alimony that somebody gets, that's considered earned income, and you can put away IRA money if you have that kind of income. Remember, if you get a form that says you made gambling winnings, you're allowed to deduct gambling losses against them. You can deduct capital losses, even if you don't have capital gains. You can deduct capital losses up to $3,000 a year. But don't forget, capital losses are not only things that you've sold and lost money. If you had some stock that went bankrupt, that became worthless, you can take the loss even if you didn't sell it. Also, if you've lent somebody money and you're not going to get it back, that is also deductible as a capital loss. Just remember that. And also, if you have a business that you're doing, or if you have some consulting income that you have, don't forget to look at an office at home. A lot of people think that, gee, office at home is a big red flag for the IRS. It's not if that's the only place that you really work out of. So don't forget that. There's a number of other things on this thing that just specific items, but if you have any questions, feel free to give me a call. Now go back to any questions you have on anything. Yeah?
Alan, with the deficit,
and the interest that's being paid on the deficit. And you're not a supreme being, I understand that, but is it possible that if we reduce our spending drastically, we'd be able to pay that interest without bankrupting the country?
One of the things about being in a deficit is the bigger the deficit is, the higher interest is going to go. One of the problems of predicting how serious the interest on our debt's going to be in the future is that we don't know what interest rates are going to be in the future. But one of the things that's critically important is the more the deficit becomes under control, the lower is going to be the rate that we have to borrow at, and the easier it's going to be for us to pay off the debt. So everything is self-fulfilling. The answer is yes. We can, if we do this deficit proposal, if we can really seriously cut the spending in all three areas. In fact, 2 of the 3 is not going to be good because they're going to mushroom. Discretionary spending, Social Security, Medicare, and Medicaid. If we can really cut on all of them and get them under control, the interest on the debt can take care of itself. There is enough there where it's okay. But that is, as you point out, if we don't get it under control, that will ultimately be the thing that's going to kill us. Because not only are we going to have more debt with interest on it, but the interest we have to pay on that debt is going to zoom through to the moon. And in fact, although we're not Greece and Ireland yet, one of the most important things to pay attention to is the biggest problem that Greece and Ireland and now Spain and Portugal and even Italy, the biggest problem they're having right now, even though they've changed their mindset, at least verbally, and they said we're really working to do this, the biggest problem that they have right now is that as their old debt is coming due and they have to roll it over, they have to pay a much higher interest rate. And that is what's going to be killing them. And that's what's going to be happening to this country too. So just getting it under control and getting people's perceptions that we're going to get it under control is going to reduce the interest rate that we're going to have to pay. Yeah.